G'day taxpayers. Preview for the Reserve Bank board meeting. The announcement 2:30 East Coast summertime on Tuesday the 18th of February. Watch this space. And it's also important because the Reserve Bank will be releasing their updated forecasts, which will be incorporated into the quarterly statement of monetary policy. And it'll be within those forecasts that are the reasons for the interest rate cut that they will deliver. Now, at this stage, probably only a 25 basis point rate cut. They will probably also signal a cautious approach to future interest rate moves, but I think we're in for the period where we're going to be seeing a series of rate cuts in consecutive meetings. The economy is soggy, inflation is low, and that's why you cut interest rates. They're currently at an oppressive level, so you need to move them back towards neutral to get a neutral result for the economy, because if you keep them too tight for too long, the economy gets too weak for too long. So, critical things for the RBA when they are considering their interest rate decision is inflation. As simple as that. That December monthly inflation number was lovely and low. We've all heard about that now. And as I scour through my email inbox and do my own little bit of number crunching, whatnot, everybody, including the RBA, when they put out their statement on monetary policy, will be revising down the outlook for inflation. It was a story from a year or two or three ago, but inflation's comfortably within the target. If anything, we could be seeing inflation at or below the midpoint of the target range. So 2.5 is where they aim, so it could be into the low twos. And for that reason alone, when you've already got the cash rate at 4.35%, you start trimming them back towards a more neutral setting. The other important element is that wages growth is starting to decelerate. It was 4.3% a couple of quarters ago. It's now at 3.5%, and disconcertingly, the day after the board meeting, the next wage numbers come out. Timing of the board meetings is horrendous. Yeah, they changed all that, but they've again seemingly fucked it up again. But anyway, so we get the next wage number after the board meeting. But look, it's probably going to be confirming inflation down in the low threes, 3.1, 3.2% in annual terms. And to the extent that wages filters into services inflation, which it does, another downside tilt to the inflation momentum. And indeed, it says that Nauru is probably nearer 3.5% than the 4.5%. That's big implications for the RBA, who seemingly are obsessed with that Nauru estimate. The other thing, global interest rate cuts are continuing, putting aside the US for a moment for all the obvious reasons, but just about everyone else is cutting interest rates. And the Fed has already cut 100 basis points, don't forget, too, and we've cut, nothing at this stage. The bottom line growth is very weak. There seemingly will be an okay December quarter GDP number when that's released in early March. But the early indicators since then for January and the early stages of February is for a period of weakness. It seems that retail spending we got sort of out of our system late last year has sort of faded in the early part of the new year. And we also know that things like house prices are weakening. And again, not that the Reserve Bank adjust interest rates because of house prices, but they adjust them because of the wealth effect. And if house prices are coming down, if the banks have some problems on their balance sheet, if house price weakness continues, and of course that's a big if, then a trimming of rates will just sort of shore up the whole structure of the banking sector, because we don't want our banks to be hammered too badly in any period of house price weakness. So, end game, 25-point cut with more to come. I think it's as simple as that. Stay tuned for 2:30 Tuesday, Eastern summertime. Good luck.